Okay. Now let's try to understand how your assets and liabilities will be presented in your financial statements, because within revenue recognition there may be unearned revenue or your advance assets. So let's try to understand through one example of Microsoft Azure. Now they had given the cloud services worth $20,000 and the client has not been invoiced yet, but already they have been delivered the services. So what will be the presentation implication? It will be shown as current contract asset if the payment is going to be received within 12 months, that is your current assets. Let's take another example of Deloitte Consulting, which has created $50,000 of milestone and the payment due is 30 days after the completion of service. So in this case as well, presentation will implication will be simple, that the entity has performed their work but the cash has not been received. They will be showing it as the contract asset to be received within 12 months, then it will be current contract asset. Similarly, let's take another example where Bechtel Constructions has done 40% of the bridge completion and progress invoice has not been raised now. In this case as well, if the payment is expected to be received within 12 months, this 40% will be treated as current assets. Now let's see another example with the accounting entries as well. So on 1st January, there is a vendor company Horizon Machinery and they are going to sell certain bulldozers to another company, and there are two bulldozers. Each bulldozer's price is $250,000. Now the contract has a specification that one bulldozer to be delivered on 1st March. It will be delivered on 1st March. And the payment for the first bulldozer is conditional at the delivery of the second bulldozer. When the second bulldozer will be delivered, payment will be done for the first near around that time. Now the second bulldozer is delivered on the 1st July and the first is delivered on 1st March. What will happen and impact on the accounting entries for them? So here if we see, the journal entry will be to recognize the contract assets and revenue for the first bulldozer. As we all know that Horizon company has satisfied its performance obligation, they have transferred, given its first bulldozer. Then but on the 1st March there is no receivables. Why? Because the receivables will be realized or recognized only when the second bulldozer will be realized. So in that case we can't debit the receivable, we need to debit the contract assets of $250,000, and that has given rise to the revenue of $250,000. Now after that on 1st of July, revenue is I can say recognize the receivables, right? Because on 1st July the second bulldozer is delivered. Now the company will have the debtors, or I can say accounts receivable, for both of the bulldozers. So they will be saying on debit there is $500,000, $200,000 for each bulldozer, making it $500,000. And similarly they have debited the contract assets. Now this needs to be cancelled out, so this has been credited here. And for second bulldozer the revenue needs to be recognized, so the second bulldozer revenue is credited here. So this was the thought behind the contractual assets. Now let's try to understand the contract liabilities as well. Now for example, there is an Amazon Prime membership and the customer prepays $120 for 12 month subscription, which generally happens. Now what will happen? Show obligations to deliver services, liability will decreases monthly as revenue is recognized. So Amazon will say that on 0th day when customer has made the payment, Amazon will say $120 is their contract liability. Every month they will be recognizing the revenue, and remaining period their liability will keep on decreasing as and when revenue will get recognized. Let's see another example of Adobe where $600 is paid for annual subscription. Again, recognized under current or non-current liabilities. It will depend whether the payment will be received for a longer period of time or so on. So it will be dependent upon the timing of service of delivery. Third example, let's see, the Tesla company prepays $10,000 deposit for a custom car to be delivered in 6 months. So a customer pays 10,000 deposits. In that case, what will happen? liability highlighted obligations to deliver the vehicle, and revenue recognized upon delivery. So until the time the car is delivered to the customer, Tesla will show this 10,000 as their liability for delivering the car. Now let's try to see the same thing in I can say accounting entries terms or method. So we can say there is a company whose name is Horizon Machinery. They have entered into a non-cancelable contract with the Global Construction for sale of a bulldozer for $200,000. This is a non-cancelable contract, right? Now bulldozer will be delivered to the global company on 1st May, and the contract requires global company to pay in advance on 1st March, and the payment is made on that date. Payment has already been made. Now we need to prepare the books for Horizon company. The Horizon company will be delivered on 1st May, however payment received in March only, so they might have got certain liabilities in their books, right? So Horizon company will recognize the receivables because it has unconditional right for $200,000. So they will be doing receivables debits $200,000 and the contract liability because they have not provided the assets to them. On the same day only, on the 1st March only, the global company pays to Horizon company. So global company will debit the cash because money is received, and these debtors are just getting cancelled, so they will be crediting the debtors or receivables, we can say. So effectively these get cancelled, and still the cash is there, and the liability of Horizon company to deliver the goods is still existing. On 1st May, what will happen? This liability which has been credited, this will get debited, and finally the revenue will be recognized here by crediting the revenue. So this is the way through which contract liabilities can be recognized and understood.